Welcome to Taking Care of Lady Business, where we put the business back in lady business. Hosted by Jennifer Justice, founder and CEO of the Justice Department, a management strategy and law firm that works with female and woke male entrepreneurs, executives, talent, brands, and creatives to build and maximize their wealth, focusing in the areas of tech, consumer product, finance, media, entertainment, and fashion. Jennifer interviews entrepreneurial women who have done it all, who will be sharing their secrets on all things business, especially as a woman. These highly successful women will share strategies and insights, including what not to do and what it takes to win. And now, here's your host, Jennifer Justice.
Hi, everyone. Welcome to this episode of Taking Care of Lady Business. I am Jennifer Justice. Today, we have on Sallie Krawcheck. She is the CEO and founder of Ellevest. Hi, Sallie.
Hey, Jennifer. How are you?
I'm good. How are you today?
Good. No complaints.
So, Sallie has a very amazing career background in finance. If you do not know her, you're going to hear all about it right now. But she has graced covers of magazines. She has started companies. She's been an industry titan and all of the things above. And also, I've always been a fangirl of hers. So I'm really excited to have you on. And I want to start by explaining what Ellevest is, and then we're going to get more back into your background.
Yeah. Well, first of all, I'm a fangirl of Jennifer Justice's as well. So we both got that in common. So Ellevest is the invest tech and wealth management company built by women, for women, founded by, investing through women. So we take our women pretty seriously.
Yeah, apparently, yeah.
With the mission, which I think we'll agree is an important one, a mission to get more money in the hands of women, helping them with their investing and giving them financial guidance from that first dollar they're ready to invest through to multiple tens of millions of dollars.
And that first dollar that you're ready to invest, like, who are those women? How do you get them to understand why it's so important to invest?
Well, we've got to change culture to recognize that wanting money is not being unattractive or unfeminine or greedy or shrewish or ugly or any of those things, that investing is not difficult, is not confusing, is not as dangerous as over the long term, as we might have been led to believe. We, as women, receive negative messages around money almost from birth. I mean, even in the allowance, there's a gender allowance gap, through to women's magazines, I'm putting that in quotes, women's websites still talk about how hard money is and how difficult. And Jennifer, blame us. Don't buy the latte. Don't get the facial. Don't, you spendthrift, you carry Bradshaw with your too many shoes. Spendthrift. When it's actually, well, no, we make 80 cents to a white man's dollar.
Yeah.
So it's like literally isn't our fault. So there's a lot of education on the Ellevest website, content on social about these lies we're told about money and about, frankly, how straightforward it is to invest and how important it is for us to invest.
Invest versus savings, right? I've heard you talk about this.
Yeah. Oh my gosh. Well, savings, you're moving backwards every day because the interest rates and bank accounts typically don't keep up with inflation. Investing comes with risk for sure, but historically, if you were investing over a 10 or 15-year period, the chances of you earning a positive return were something like 98 and 99%.
Yeah.
Historically. It doesn't mean the future will be, the same as the past, but historically, if you've been investing for the long term, it tended to not be as risky as what we were built to believe. And then you move from there. Why is it important? Well, do you like leaving a relationship that no longer works for you? Whether that's a domestic relationship, whether that's a business relationship, do you like being able to start the business you want to start? Do you like relieving the stress of worry about money? They say money doesn't buy happiness. They're completely wrong. And it is in fact scientifically proven that money does indeed buy happiness and freedom and independence and strength and all the good things. And so, again, busting those myths is important.
Well, also because not having money is extremely inconvenient, and being inconvenienced and stressed is like, we grew up with no money in my house, and it was like a constant source of stress. It's all we could
Same,
talk about. So it
same,
would be a luxury to talk about myself, or
same.
yeah.
It's the only thing my parents fought about, and they fought about it with energy. It was tough, but to go dark, there is no domestic abuse without financial abuse. Because money in a capitalist society is power,
Hmm.
you see that power at the micro level within the household, but Jennifer, you see it at the macro level. Is it any surprise that women have 30 cents of wealth for every white man's dollar, and women give about 30 cents of political donations for every dollar that men are giving, which, look at where we
Yeah.
are. Look at where we are.
Yeah.
Would we be in a different place if women had more money and were donating more politically? I think the answer is yes.
Well, I know the answer is yes. And the only way to prove us wrong, by the way, is when we have that
Right,
and see what we do with it. But
right.
that's an interesting point that you brought up, is that 30 cents in the wealth gap. And not only that, how are we getting that money? Most of it is from divorcing somebody who had power over you.
Hmm.
You know what I
Well,
mean?
it can be, but divorce is tough because typically a woman does get the money, but her standard of living versus when she's married goes down by like a double-digit percent, whereas his
Right.
goes up. So, it's a double-edged sword there for sure.
Right. But, in particular, the women that we know that are the wealthiest in the United States right now got them
Yeah.
from the doors. And so that like ups our wealth gap a little bit across, an average, but like ultimately we're not making the same money. We're not investing enough to create real wealth for ourselves as a gender.
It was the big miss of the 70s feminist movement,
Right.
that it was not only, ignored, it was, sort of like, ugh, that's not what this is about. And that wealth gap has just opened up since then, which means the power gap has opened up since then.
So many big concepts and things that I talk about all the time. It's so true. It's just like this whole abuse of power. I'm also on the board of Free From, which is a domestic abuse, survivor organization. And one of the things they do is try to get restitution, and they try to get, actual damages from, the men that have financially abused them, because the number one reason they don't leave or come back is financial reasons. And one of
Absolutely.
the things that their abusers usually do is ruin their credit, so they can't get anything. They can't get a car, they can't get an apartment, they can't get anything. Yeah.
Mhm. Yeah.
So you're taking on these women in a very like initial, like, their first $50 in investing,
Yeah.
and like helping them see how they can make this money. And it's all on a digital platform, right?
Well, it's yes and no. So we are there for her through her professional and money and personal journeys. So, the first step that she can come in is when she's ready to invest. And we also offer financial guidance for when she's gotten the raise and how do I rebudget that, or she's getting married and how do my partner and I work this through, and financial advisors through whom we offer private wealth services. So we have women and our allies coming in at every stage of their financial journey. And so, the needs can be different. Oh, I have a concentrated stock position, something you know a lot about, right? How do I manage that and how do I think about that? Or I have need some financial guidance around budgeting, but it's every step along the way. What we'd love to be over time is a place where she comes when she's ready to invest and get some financial guidance and stays through to the course of her life. And we do have clients today who are in their 90s, et cetera. So we're across the spectrum, really the age and wealth spectrum.
And so when you're doing that, I know that you spend a lot of time on the kind of like companies and funds that you invest in, right?
Yeah, I love that. So more than 50% of our assets, which are now $1.8 billion, are invested for positive impact. And I don't have to tell you, there's been political blowback about impact investing or ESG, environmental, social, and governance investing. We don't believe that. We do not believe that it is necessary to give up positive impact in order to earn a financial return. Not every year, but over time. And so in our digital offering, we offer ETFs that invest, say, in women and community building. For our private wealth clients, as they become more sophisticated, we can offer women-run venture capital funds. We can offer femtech funds, which are investing in women's health. We can offer real estate funds that fix up workforce housing in a sustainable way rented to women in transition. I could go on and on, but we're seeing real energy, Jennifer, for women looking to invest in other women with sort of an intuitive recognition that most of us are what we call gender lens investors, investing in a gender. We're just 98% invested in men. And men are amazing, of course. The other tenet of investing is diversification. And maybe we want to diversify away from the men a little bit and, pick up some investments in women.
Well, yeah, because then that feeds the whole economy, right?
Oh, as we say at Ellevest, like every day, 3,700 times a day, nothing bad happens when women have more money. Nothing.
That's
nothing.
so true. Nothing.
So true. I know.
Right? I seriously doubt we would get in our private planes to go to a private island to have sex with underage boys, but you never know.
You never know. Neither would we put together phallic-shaped rockets that ship us into outer space. We would not.
True.
You know who wasn't on the Titan? Women. No women on that.
That's so true. Good point. All right, we're going to talk a little bit more about Ellevest later, but I want to get into how you got here. You already referenced the fact that your parents fought with energy about, money. And, obviously it wasn't something in your background, right? So how did you get here? What was your background?
Sort of because I could. I went to the University of North Carolina out of South Carolina, and Wall Street was the Silicon Valley of the late 80s. And so I was very scared to move to New York. It seemed very dark and dangerous. So I moved to New York. And it was pretty horrible. Wall Street was very 80s, everything over the top, lots of screaming, lots of yelling, lots of staying up all night and working on decks, and lots of running for airplanes, lots of trying to get on the right team, and all the things. It was awful. But it was I had to stay. I never had the choice of, I don't like this, I'm going to leave. Why? Because I didn't have any money. And because I had a lease in New York that lasted for 12 months and somebody had to pay it, and that person was me. And so I persevered. And finally, after years, found my right spot on Wall Street, which was in equity research. We don't have to go into it. And then into wealth management. So started from jobs in investment banking that I wouldn't want my dog to do, to finding the right place in an interesting, analytical, challenging, driven, adrenaline-inducing, part of the industry.
And how long were you there? What was that transition period?
So I think, I sort of think of investment banking being miserable, not knowing where to go, as my 20s. Being a research analyst, a director of research, really finding my groove, getting to be top of the industry was my 30s. And then, these dates don't align completely, but then being brought to run Barney, Chief Financial Officer of Citigroup, Merrill Lynch, was my 40s. And then my entrepreneur phase, founding Ellevest, is my 50s. It doesn't quite work out as neatly as I said, but there's been a theme to every decade, and really different career challenges and opportunities.
Well, I mean, I've interviewed enough women on this to know that, when you have that corporate kind of gig, right, then you're like, wait a minute. And everything is, coming to you. I mean, I had my own experience, you have like 3 assistants and they're telling you when to go to lunch and
the car and the driver, the warm
exactly. They
the plane, all the things.
And then you become an entrepreneur and you're like, no, not anymore.
Yeah, it's a different thing. And I went deep. I loved the big companies I worked at, for the most part, not every minute, every day. And I loved the people I was working with. But I did get booted out twice over business disagreements in both cases, me really trying to do the right thing for clients. And so I sort of sat back and said I could do that again and have the comfy job. Is that what's important to me? And it's totally fair if it is. It's totally fair if the title and the car, if that's what's important. What the conclusion that I came to about the time I was turning 50 is what was important to me is impact. And that, I had an offer to go to a hedge fund, which paid plenty of money. I thought, what's the impact of that? Like, really, what positive will I be leaving on this earth if I work at this hedge fund, for the next couple of decades? But as I sort of honed it down, given the good fortune I've had and the privilege I've had to have the career I had and build the knowledge I did and be in the rooms that I was, and then to see this gender investing gap, which cost some women more than the gender pay gap, and having a hypothesis, about how to solve it and the ability to, not comfortably, but to go out and raise venture money and put together the team and build a product and build a brand and build a community. It seemed like a lot of work, but boy, I see this issue and I have the ability to do it. I may fail completely, but if I don't, that doesn't seem right. You have to, give back in some way or try to leave a mark. And so, yeah, I think I'm pretty sure I'm the only financial exec of my generation who has worked in those C-suite jobs and then raised the amount of venture capital, raised any amount of venture capital that I have, glutton for punishment for sure.
Well, yeah, you're doing, you were having those same revelations as like making money for men by day and trying to overthrow the patriarchy at night. And so like, putting those two together,
Except I wasn't trying to overthrow the patriarchy. I mean, I'm going to be honest.
Yeah.
I thought for a long time, I thought everything's fine. Other women just look, I did it. If I can do it.
Right.
I just work harder, everybody. Work
Is that
harder.
what you thought? Like maybe you should work harder? Yeah.
Yeah. I work tremendously hard, to be fair. And the narrative in my mind, and I like the people that I worked with a lot. And so the narrative in my mind was a little bit of luck and a lot of hard work. And you too can become chief financial officer of Citigroup. Right. At the same time, my sort of squad of business school friends, women, I think there were about 10 of them, everyone was falling to the wayside. And it was only really, and they worked hard and they were smarter than me and better than me and, et cetera, et cetera. And it was only when I sort of took the career break and stepped back and said, okay, what really happened that you say, well, she was great at her job, never got promoted. She, had to go home because the childcare really fell on her. She, this and this. And then you're like, oh, it's the patriarchy. Oh, I'm embarrassed that it took me so long, but it did.
No, I kind of feel the same with my career. I mean, I was like representing women, and trying to get them more money, and I would see how it was held back, but I could also see, I think the patriarchy is a big part of it, but it's also us not doing the things that we're trying to solve for. It's like negotiate for ourselves, invest in ourselves,
But again, it's the patriarchy because we receive these messages that if you negotiate too hard, you're a bitch.
Yeah.
And if you want money, you're a shrew.
Yeah.
I mean, it's all internalized at that point. There's the external and the internal for sure. For sure.
Yeah. Okay. So then you took this point and you sat back and you're like, okay, I need to go do this.
Yeah.
And then you had to go raise money, which you've never done before, right?
No.
And tell us about that, because you would think that you're Sallie Krawcheck, all these billionaires and all these really rich people.
Yeah.
So it's super easy, right?
Yes. Well, yes and no. So to be honest, the first round was. My co-founder who had done this before said it was the easiest round he ever raised. It was $10 million. It was on a PowerPoint. And I went to people who I'd worked with and knew. And so the response, and they were writing smaller checks, and the response I got was, well, we know we see there's an issue from the numbers. Morningstar, our seed investor, said, we've tried to solve this. We've never been able to. We're not sure if there's a solution, but we know you. And if there is, we think you've got the best chance of, figuring it out. So that wasn't so bad. The Series A wasn't so bad, led by the great folks over at Rethink Impact, saw the vision, believed the vision. We're looking at, investing alongside others, and they're like, we're going to lead. So those were, and I'm like, all right, we got this. Then I hit Series B. And I talk about the Series B cliff, which is when women, can raise those first rounds and often can raise them from other women, but then get to Series B where there are very few women writing big checks. And Jennifer, in fintech, there are very, 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 I could keep going, few women writing big checks. And what we saw, the results were good. We were growing, and we were growing like this. I'm putting my hand at a nice angle. We weren't crypto, which at the time was growing like this. And so way, people are like, oh, it must be easy to raise. You're in fintech. It actually was harder to raise because everybody was over on one side of the boat, flipping the boat over. A lot of those companies are now out of business. And we got strategic interest. We were getting the round slowly done, but you could feel like, it just, I mean, I always talk about if women raise 2% of venture dollars, and by the way, in fintech, it's 1 in 10,000, but that means 50 times more meetings. The 2% means 50 times more meetings, 50 times more models sent out, 50 times more decks, 50 times more questions, 50 times more stupid questions, 50 times more time. And so what I could feel is we're making progress, but your existing investors are like, whoa, what's taking so long and what's going on? And, and I'm like, I know there's a way. I know there's a way. And we ended up having women, a series of wealthy women, not billionaire women, but wealthy women, invest some 650, 700 women and other underrepresented investors came together in special purpose vehicles and raised our round for us. So we found a way. So the answer to your question is the last round was really painful. Silicon Valley, Sand Hill Road was not buying. I could get a meeting, but wanted hyper growth, and the women came and saved us. It's really unbelievable.
Amazing. Yeah. So you can invest in or invest with.
That's the funded by, founded by, the whole thing. But it, and you could feel the gender and the age issue come up. I was talking to the wife of who's a friend of mine, of a big venture capitalist. We were talking, she said, I'll bet they didn't fund you. I'm like, nope, they did not. And I was telling the story about you walk in and they were comparing our numbers to others.
Yeah.
And our numbers were, the folks who you might compare us to, our numbers were better. And they still said no, because they said they're too much better. They're too much better.
Yeah, that makes sense.
To collapse. And I'm like, that is sexism and ageism. I'm watching it happen, because you're damned if you do and you're damned if you don't.
Right. I mean, there's nothing you can do, right? It's a woman, right? There's just nothing.
Well, how about that recent research that women are too young and women are too old and there's no right age unless you're a man?
No. I love that meme. That was an amazing one. The perfect age is a man. Yeah, exactly. No, that makes perfect sense. All right. So what year was that when you were raising the Series B? When did that happen?
So that was, it's all a blur now. Where are we? Summer. It was 2 years ago to a year and 3 quarters ago.
Yeah. Right.
2022. In fact, we raised it in such a way, I like to say, if I'd been a cat and they'd been slamming the door, my tail would have gotten, the end of my tail would have gotten slammed to the door. It was when the VC markets, slammed shut.
Right. All right. So you're well on your way. Ellevest is growing, right? And so what are you finding, like data, et cetera, in these years of having Ellevest? Are more women joining? Do they understand? Or this, are you finding them?
Look, the challenge is, we can talk to them about the importance of investing. What is hard to do is to communicate the urgency, and that every dollar historically invested in your 20s is worth more than a dollar in your 30s, your 40s, your 50s, your 60s, because of the not very intuitive power of compounding, where, your money first earns returns just on your initial investment, but then earns the returns on the initial investment plus the returns, and then the returns plus the returns, and the returns, and there's a whole snowball effect. So that's, I don't know that we've ever really gotten that figured out. I want to tell folks, the analogy I sometimes use is, if, you invest over the course of your lifetime, when you look back, you could have lost, $100 a day by not investing. And if your purse had a hole in it and $100 fell out, what would you do? Would you get that purse fixed tomorrow, or would you wait weeks and weeks and weeks, which is what people do? So that's our challenge. We find when women do invest, they're better at it than men. And it's what the research has told us for forever, but we see it in action, where in the markets of the past year, our friends who are men were more likely to panic. They tend to check their accounts more often, which tends to mean they do something more often, which tends to mean they, make a mistake more often or trade more often. And women have just stayed the course. The significant majority of the women with Ellevest have recurring deposits, and they just keep them on.
Yeah.
And so that means they're buying, into a diversified investment portfolio, even if they might be freaking out.
Yeah.
They just keep doing it. And that's the smart way to do it, is not invest on your emotions, but to invest, steadily and through a sense of panic sometimes.
I find that so my kids have a little account through Greenlight, right? That has this MasterCard that they have. And, they have a couple $100s in it. But what, I wanted them to, learn about, in particular, my daughter and my son at the same time. What I find is when they first started investing, everything was going down, right? So they can understand when they were making and to leave it in to make more. But what people get freaked out is when things all go down, And so it's well, how do you make that back up? And when do you actually sell it when it goes down versus wait, those are the kinds of things that also I find very confusing to this day in general,
Right. Well, the answer is you should not be investing in the stock market unless you can do it for the long term. If it's something where, hey, I want to buy a house in 6 months or a year even, just don't. Don't. But if you invest for the long term, then the fact that the market is down today, and it could go down more, and it could go down even more, historically over 10 to 15 to 20 years, you've made that up. Again, the future can be different from past, and past returns are no guarantee of future, all the things. But historically, the best, even though it's gone down, it could go down more. You don't know. I mean, the other thing I'll say, you don't know.
Yeah.
You don't know. And the market is an aggregation of the best thinking of professionals and amateurs, but professionals who do this full-time, Jennifer. That is all they do. And they've done it for decades, and they went to school, and they do it all day, every day. And for somehow your kid or you to think,
I know,
gone down and it might go down more, let me trade. You don't know.
Yeah.
By the way, neither do the people who professionally active manage. The percent of those who consistently outperform on a 5-year basis, something like 0.1% or 0.0. I mean, some ridiculously small number.
Yeah.
But it's so hard, because what you want to do, what we're taught to do, is more effort equals more return, right? More expensive equals better. And so and plus there's a lot of signals for us that you need to spend a lot of time on this. There's CNBC, and there's Bloomberg, and there's Fox Business, and there's Barron's, and there's Business Week, and there's there's a lot of stuff out there. And so you're there is volumes of information that I should be consuming, and I should spend a lot of time on. And you know what? It hadn't helped. It's hurt.
Yeah.
What's worked is a diversified investment portfolio, built carefully, as we do at Ellevest, based on what your goals are, when you want to achieve your goals, your age, the area of the country, therefore we can build a wealth forecast for you, your gender. Gender matters. Why does gender matter? Gender matters because we women earn less, salary peaks sooner, take more career breaks, and live longer. That matters. That matters.
Yeah. So for all of those reasons. And so talk about Ellevest, how you sign up, what's the actual.
Well, it depends on what you're looking for. If you are looking for digital investing, go over to the website, ellevest.com, get started. And if you can make it take 15 minutes, I will give you a gold star. Pretty straightforward. You have to link bank accounts and give information, et cetera, in order to get the money in. But it's pretty straightforward. If you're looking for a financial advisor or financial guidance, you can sign up for that, and someone will reach out and contact you as well. But pretty straightforward. Or start, if you want, start to follow us on Instagram. You can start to follow me on LinkedIn. Sign up for the newsletter. There, you can take some baby steps if you're not ready, but you should take the big step anyway.
And when they come on, how do they know what they're investing in? What do they like?
We do that for you. We're not a place that, go trade and figure it out.
Yeah.
Instead, on the digital side, we invest in ETFs, exchange traded funds, which are mutual fund-like entities, 22 of them. And then we have that's a core portfolio. We have an impact portfolio, which adds the positive impact. We do it for you. That's what you pay us for, to build that investment portfolio, to rebalance it when it's necessary, to shift it as necessary. Then as you become wealthier and supposedly more sophisticated with a financial advisor, you can then begin to invest in things, as we talked about before, the private investments.
Yeah.
For you, which are more eclectic and where you can have more direct impact.
Right. So along this journey that you've had now as an entrepreneur, like, what do you think the things that you did right were that like really helped you?
I don't know. I never think about them at all. Like I
Because you just go.
did
It's like, I'm just gonna
something
go.
great. I just, doing it.
Yeah.
And all the trite stuff, failing fast. We had a debit card offering at
Mhm.
Ellevest. And I'll tell you, we boy, did we make a mistake. We really didn't listen to our community. We said, "Do you want a debit card?" And they're like, I mean, women don't want to hurt your feelings. So,
Yeah.
yeah,
So true.
sure, why not? And we just brought it out, and people were like, yeah, no, I've got a debit. It wasn't a pain point for her, but we failed quickly and brought it back. We did the same thing. We had career coaching, which did well for a bit, but then I think, just ran out of steam. I think the folks who were looking for it looked for it, and we weren't really weren't getting it, so we pulled back on that as well. So I think we failed. I think the original idea, the recognition of the opportunity was nobody else saw it the way we did. Everybody who did framed it as a marketing problem. Here's our offer. We need to change women, convince them. And we said, we're going to build a whole new product. Again, the algorithm based on gender, the impact investing, and then 1,000 other differences in the onboarding that you wouldn't notice, but make it feel more seamless. Whereas at one of the quote unquote competitors, it feels, like, I have to stop. I have to figure out what this word means. I have to learn. So I think we saw the opportunity, we saw the problem, we framed the problem correctly, and we built to the problem as opposed to throwing mud against a wall.
Yeah.
And that's where we failed. We just failed quickly.
So I mean, that you just brought up something. It's like, what does this word mean? You know what I mean? And it's like, there's so many, acronyms, et cetera, in there. I've told you my story about dry powder, right? Where I like started the Justice Department because I was on this call and everybody kept talking about dry powder. I was like, what the hell is dry powder? And I happened to like be virtual, even though it was, pre-COVID. I'm looking it up. I was like, what? Why is it even called dry powder? It's like extra money. Like, why is it called that?
This is the gender difference. So everybody thinks the gender difference is women are risk averse, therefore they don't invest. The real gender difference is men will not understand jargon and keep going.
Yeah.
And invest or, take whatever action. Women will not understand jargon. Like, what does that mean? I need to figure it out. Same with risk tolerance. Pretty important concept. Men don't know what their risk tolerance is, but in onboarding, they take an educated guess and continue on. Women are like, that seems important. Yeah. I'm going to buy a book. I'm going to try to, and then of course life gets in the way. That's the gender difference. Our joint friend Rush Masajani talks about boys are taught to be brave. I don't quite know what my risk tolerance is. I'll keep going.
Yeah.
Girls are taught to be perfect. That seems important. And it seems like, that's smart of us women to figure it out, except it's not, as it turned out, because men just get in there and start accruing those returns. And for us, you never know enough to invest. You never.
Yeah. If you lead with one thing today, you never know enough to invest and leave it to.
You have to do it. And you have to do it. Yeah. You have to do it. We're giving up too much wealth. We're giving up too much power, both individually and collectively. Too much.
Yeah, I agree. Wow. Well, I don't really know how else to end other than that. So, I mean, there is one question I ask everybody on here, and that is, what is the worst advice you've ever received?
The worst advice that I've seen received was my ex-husband telling my brother not to invest in his 20s because he would make so much more money in his 30s and 40s that it just wasn't worth it in his 20s. Which means my ex-husband didn't understand a few things, we won't go into it, but did not understand the power of compounding and the ability, the benefit of starting early. And by the way, if you haven't started yet, no big deal. The past is the past. Starting today is a good time to start.
It also seems like your ex-husband didn't know what you did for a living. So
Well, there's a lot there. We can make
that's a whole other podcast.
For sure. For sure.
Whether or not it's aired is another thing. And I think there's drinks
as well.
Oh my God. Amazing. Well, you already went over how you find everybody here, but say it one more time. Ellevest.com.
Ellevest.com. ELLEVEST.com.
And it's Sallie, SALLIE with a KRAW check.com.
HECK. Not as bad as it sounds like it's going to be.
Amazing. Thank you so much for your time here, and everyone for listening. Thank you for listening to this episode of Taking Care of Lady Business. Until next time, I'm Jennifer Justice.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.